I'm going to introduce myself. My name is Kyle Stevens. I am actually one of the co-founders of Artificial Code Corporation. We've been around over 10 plus years. We do a lot of consulting regarding business funding credit, and we also connect business owners and we create friendship and partnerships. Um, but what we're going to be talking about today is pretty much the secrets to securing money and credit for your business, even when banks say no. Now, question I have to ask you, have you ever owned a business that failed? I have. I've been in business over 10 plus years. I have a lot of business that was successful, but I have a lot of business that failed. And part of the reason was lack of money and lack of knowledge and experience. Now, according to the Bureau of Labor and Statistics, 1 out of 5 businesses fail within the first year of operation. And within 5 years, nearly 50% will have closed their doors. In 15 years, 75% or 3 out of 4 of businesses will have closed down for good. And this is all according to the Bureau of Labor Statistics, U.S. Department of Labor. Now, this here is a statistics of business failure. It's showing the survival rates of establishments by year started and numbers of years since started in 1994 to 2010. And as you see it, you see businesses decreasing instead of increasing, okay? Now, according to the Small Business Administration, the top 2 reasons for business failure per SBA include management issues, which means bad decisions and lack of experience, and of course, insufficient capital, which is lack of money. Now, where would you go if you need money? Over 75% of business owners go to friends and family. Most also use their personal assets. And almost all business owners use their personal credit to grow. Now, according to the Department of Revenue, only 1.2% of business loans and financing comes from conventional bank SBA loans. The other 98.8% comes from alternative lenders. Now, in 2014, the amount of money dedicated to SBA loans decreased by 108 million. Okay, now according to Bloomberg, he's telling the small businesses don't even bother to go to banks for funding. 86% of businesses rely on credit or financing for survival, and that's all according to the National Federation of Independent Business. According to the Small Business Lending Index, these are all facts, guys, 89% of business applicants were denied financing when they applied through the big banks. We got to keep it real. We're in 2018. All the old way of getting money is dead. No traditional banks is giving out money. And even if you are even qualified to get money, 9 times out of 10, you need the money right away. It takes 3, 4, 5, 6 months to even get the money. The only way it speeds up if you built a relationship with them. Okay, now I got a question for you. How many people have you ever met who had secured SBA loans? To get approved, you have to have your personal, your business, and your bank credit. It must be damn near perfect. Okay, you must have excellent current and projected financials, tax returns, bank statements, resumes, and business plans, background checks, and collateral. Now, you and I know there's not going to be a lot of people that's not going to meet that criteria, okay? So that means that you're not going to get approved, okay? Now, over $6.7 billion will be lent to the small businesses this year, but most of this money will not come from the big banks. The real problem isn't a lack of available credit and money. It's that business owners don't know where or how to get it. Now, this is what you need to pass the credibility test, okay? What we're going to talk about right now is the secret approval formula, okay? What I'm going to explain is basically the exterior structure of it, and the next video is going to be the interior structure of it, okay? So starting off would be your entity. You need your business address. You need your business phone number, your email and website, depending on the industry that you're in, your licenses and other documents, and your EIN number, your bank account as well, okay? Now, these are 3 ways to get funding that your bank won't ever even tell you, okay? The first one is what is called the cash flow financing. Now, cash flow financing is the most popular type of alternative funding today. These are cash advances that look at a bank account based on the management for approval. Now, if you have more than 10,000 in deposits, you can definitely be approved. The good thing is this is very fast and easy, and it's a way to secure money. And you must manage your bank account responsibly and have consistent deposits. You can typically get as much as 12% of your annual revenue advanced. And this is a high risk lending as no collateral is pledged, and you only need a 500 FICO score for approval. The next one is collateral-based financing. Now, with collateral-based financing, you can be obtained if you have some type of valuable collateral to offset what you're borrowing. Even as a startup with bad credit, you can still secure collateral financing if you have collateral. Now, rates are super low, much lower than with conventional SBA loans. It could be as low as 2%. Some types of acceptable collateral include accounts receivables and purchase orders, stock bonds and 401ks, inventory and equipment, real estate, even an insurance book of business, okay? Now, credit-based financing is pretty much unsecured credit-based financing, which is a great way to get money for your business if you have good personal credit, or if you know a guarantor who does. You can secure credit up to 5 times of what your highest revolving limit account has now, and it can be up to 150K. Rates are usually 0% for 6 to 18 months. This is a no-doc funding, so even startups can qualify. Accounts report to the business bureaus. And there's also other alternative financing as well. Private money is also available if you have good tax returns. Crowdfunding doesn't require cash flow collateral or good credit. You can even get specialized funding to buy equipment signs and vehicle wraps. Now, this is where you can really blow your business and take it to the next level. Business credit. Okay, this is a game changer. Business credit is credit as obtained in business in your business name. With business credit, the business builds its own credit profile and credit score for its EIN number. This credit is in the business name, and it's based on business's ability to pay, not the business owner. With an established credit profile and score, the business will then qualify for credit. The business qualify for revolving store credit cards like Staples, Lowe's, Sam's Club, Costco, BP, Walmart, even MasterCard, Visa, and American Express. The business can also qualify for credit lines and loans using its business credit. Now, why is business credit so awesome? Because you can double your borrowing ability. Let me give you an example. If you go to Macy's and you have a credit card, a personal credit card, that the amount is $15,000. If you go into that same Macy's and you apply for a business credit, it will double that. So instead of $15,000, you get $150,000, because you got to understand, when they look at a business credit, they look at it as an organization, a corporation. They're not looking as a person. So of course, organizations and corporations are, which means more people, which means more volume, which means it needs more money, and which means that I would trust a business to pay me back quicker than a regular person paying me back, because they got more buy power, they got more access to funding. If that makes sense. It has nothing to do with personal credit. It's very fast. Initial establishment of credit profile and score. Business credit scores are based on only one main factor. And let me give you an example. With personal credit scores, they're based on 5 factors. You got the payment history, you got how many times it can be used, which is utilization, the length of credit history, the accumulation of new credit, and then you got the credit mix, right? Now with the business paydex score is only based on payment history. So for example, if you expect payment and you pay it early, that's 100. That's 100. Your credit is 100. If your payment is prompt, that's 80. And of course, as you're reading it, payment comes 14 days beyond term, 70, and it goes all the way down to 20. Okay. So as long as you either pay it early or pay it prompt, you got very good credit. That's simple. No personal liability, no collateral, nothing of that nature. Now the business credit approvals are 10 to 100 times higher than consumer approvals, and I already explained to you prior why, right? Perfect for startups. No cash flow requirement is a competitive advantage. No collateral requirements. It's definitely easier to grow a business because it's not based on your personal credit score or your personal social security. And it's essential to sell your business. Okay, that's highly important, because when you think of creating a business or working a business, you want to create a system, an organization where you want to sell it one day. Okay, you always want to think about that. And the good thing is every highly successful business in America has business credit. This is an example of how it looks. So for example, this is Facebook, right? The city is Menlo Park, state's California. Now, the trade lines has 40 trade lines, right? The credit score, that means it has good credit and it has the profile plus. Same thing here with Experian. This one is a bodega, right? The name of the company is Dell Inc. Round Rock, this is Texas, right? You see the trade lines is 83 trade lines. It shows that it has credit score, and it shows it has profile plus, right? Which is really, really good, okay? And so on. Those are great, great examples, right? Another example, right? Remember when we explained to you that highly successful businesses have business credit? Well, Walmart, right? 80% of their cash injection comes from business credit, right? And the proof is in the pudding. 513 trade lines, It shows that it has credit score and Profile Plus, and it keeps going. Right? New businesses can get business credit too, which is really exciting. Okay. So what I'm truly saying is you have an opportunity that you can use this business credit strategy, get money, elevate your business, and you can do that all with your EIN number without your SSN. Now, this is the first part of our video. The next part is in detail of how you can actually get it in the direction and we created a system of how we can get it and make you self-sufficient that you get anything from 150 to 2 million to any amount that you want. Okay, so stay tuned. I hope you enjoyed this video. Get ready for the next one.